We got a few minutes. You want to try to hit Lennar company?
Yeah.
Okay, let's look at Lennar. Their symbol is LEN. Then the residential construction, their short is about 7.2%. We do see a PE ratio that looks okay, 13, but that's above the industry at 12.4. Price of sales, 0.8 versus 1. We also do see that the price of cash flow, nothing there, unfortunately. Price to book value is 1.4 versus 1.3. They do have a PEG ratio of 2.3. The industry is only at 0.7, so Lennar not looking good there. Wow, earnings over the last year were down 29%. Industry was down 18%. We do see sales for Lennar were down 1.9%. That is better than the industry. That was down 6.1. 5-year earnings per share growth estimate, 7.6 for Lennar, about the same as the industry at 7.2. They do pay a small dividend, well, and maybe not too bad, 1.9%, using 20% of the earnings to pay that out. On the balance sheet, now this is different because it's a builder. Current ratio very high, 12.6 versus 8.4. I think that's because of deposits, some other accounting issues there. Debt to equity very good, 0.2 versus 0.4. Net profit margin checks in pretty good too, 7.7 versus 8.2. Return on equity 11.8, not as good as the industry at 14.2. Free cash flow for Lennar is a negative $713 million, I believe that is, versus a positive $883 million for the industry. What about going forward, Chase?
As a current price for Lennar, again, their ticker symbol LEN, it's $102.97. 52-week range. It's been a difficult year for Lennar. The low here, $98.42. So again, right around that current level, while the high is $144.24. Year to date, the stock is actually down close to 25%. The stock, though, has done well over the last well-ish over the last 5 years, about 35%, but over the last 10 years, it's up 144%. So again, you really had a good, I'm going to say, 9-year return, and then the last year, it's really kind of been bogged down. And that's, again, what I'm talking about with the AI trade is just because something did well in the past doesn't mean it will do well going forward, as we've seen with the home builder Lennar being down about 25% this year. Now, going forward, that's the big question. Should you be buying Lennar after the dip here? Going out to November 2027, I see estimated earnings per share of $9.87. It gives us an attractive target sell price here of $163.84. Trades around 10.5 times future earnings, which is a decent valuation there. But the big concern you have, the low estimate, $7.42. The high estimate, $14.11. And they're looking for earnings growth of about 39% with the cost of labor, the cost of materials. I don't know how they could expand margins by that level.
Yeah, it's just, and again, we talk about interest rates as well. I don't think that's going to do well. And I do see that the estimate is down 17% from 90 days ago. So it looks kind of attractive, but I don't think it's the time. I don't think 2026 you should be buying a builder.
Yeah, I think I got to be cautious there.
Yeah.